How's it going, guys? I hope everybody is doing good tonight. Quite the session today. Had some nice plays, some nice momentum in our room today. Saw some great trade ideas, saw some great trades. Lots of good things going around. It seems like our momentum is just kicking up a notch here in 2023, and we want to continue to see that moving along. Could not be more proud and more stoked. Let's get into it. Markets are bracing for what could be disappointing economic news in the face of rising optimism that inflation has peaked. This data includes the first read of Q4 GDP tomorrow at 8:30 a.m. and then the PCE price index on Friday. Both are expected to reveal underlying economic strength and could come in hotter than expected. In this scenario, the fear of rising interest rates would peak again and likely bring the markets down. If not, the market may be able to extend the rally that began on the first of the year and in January on an up note. The S&Ps are now at a critical juncture. It is above our key channel, but below a pivotal resistance level that could continue to cap gains if no other catalysts emerge, leading to a whirlwind of back and forth push and pull, just as we have been stuck in for weeks now. The risk that seems to be ignored by many market watchers is that the outlook for earnings is in decline. In this light, markets may move higher in the near term, but any gains are subject to quick reversals as the market bias and retail sentiment remain bearish. All right, we're going to go ahead and take a recap of the market here. We're going to get a little bit into this, and then we'll take a look at what we're watching for the rest of overnight and into the pre-market session. We will touch on some of the stuff we added into the room today, but I'm going to make a separate video for those just to keep it a little bit easier and a little bit more well-defined. So yesterday, we saw it was just another trap-filled range-bound chop day for markets, just as we anticipated. And what do we consistently teach that comes after these range-bound chop days? That's right, big clean moves, and we certainly saw this play out today. Yesterday, we talked about the bear case remaining fairly straightforward, and that it began on the loss of that key 420, 415 zone right in there, that area that we've been watching over and over, where we would be looking to short the failed support if confirmed. And this triggered, short triggered overnight, playing out very nicely all the way to our 39.75 target. So we got this nice drop right into there. Pushed back up into there. And then failed once again, and we'll get into this for today. But we're going to go ahead and get into the 15-minute. In fact, let's go ahead and drop that down now. Makes it a little bit easier here. There we go. Let's make it a lot easier. We'll back out in a minute. But there, so we can see pretty much what I was just talking about there, right? So we have that 40, 20, 15 area that broke down, and we were looking short. And it failed that support, came all the way down to our 39.75 target here, with the second chance to enter on the failure of that 39.95, where it was kind of bear flagging here. We were talking about this in real time last night, and then as that broke down, we got right to our target, had a little look down, and we'll get into that because this is going to go into the session during the regular trading hours. So once that hit there, we did see the regular trading hour period as we went into here, and then we alerted early on to be looking for dips to be bought, as they have been regularly since basically the October low, and to sell the spikes that do not break and confirm either loss supports or key resistant pivots. This dip was bought, and bought with force. In doing so, despite the massive two-sided volatility, we essentially ended the day unchanged from yesterday. Importantly, though, ES is right back at its core bear market downtrend line from January last year. We keep pounding the table on daily, and the attempt to see some sell-side momentum was sharply reversed. This is now the 7th attempt to break this line out in the past year. So bear market drops us down, goes into the regular trading hour. We're saying to look for the dips to be bought, look back and fade. And it was bought, and I mean, this thing just pushed heavy here. We had that next test. I mean, look what it does. Of course it is. So bear flag gets us down to our target. It's that simple, guys. We talked about it time of day, the reversal period perfectly, and then bull flag and the opposite. I mean, it doesn't get any more textbook than that. Look, at all. right? It really, really doesn't. I mean, today was essentially the inverse of yesterday, where we saw what could be labeled as generally poor trading conditions, i.e. chop mode 101, poor follow through, tight ranges, and high cost of business trading. Today, though, we essentially got the exact opposite. Big trendy moves, downside to start, then a clean trigger to the reversal right back up with plentiful follow through as we see here. Minimal trapping, minimal chop, and ultimately tagging all three of our alerted targets for the regular trading hour session. One thing that's cool that they just added in here in TradingView, I'll show you guys real quick. So we always had the little icons. You always had these, but if you actually go into here now and go down here on emojis, oh yeah, we got emojis, baby. Gonna go ahead and grab that. So we came into here, got our little golfer man. We said to watch out for the dip buys if they did not break down the further support there. And what did we see? We got Kucha, first target. Then we got Kucha, next target, and Kucha, third target. And those are staying on for now. Yeah, this is the worst thing that probably ever happened to me. I was so stoked to see when these went on there today. But yeah, so we do have to kind of acknowledge, though. I mean, today, it was a great day, and we can't ask for too much more. At least from the perspective of a tactful day trader. But we do have to acknowledge the 10,000-pound elephant in the room here, though. That despite this lovely clean intraday price action, we are net unchanged. Right back from where we spent all day yesterday. Right back in there again. But I mean, this just reiterates, though, an important point that we often want to make here, that, black and white bulls, black and white bears both lose. It's only going to be reactive, directional, unbiased traders that are making money in general and consistently. Anyone going into today with a rigid one-way bias, they lost. As did anyone going in today with a rigid prediction for how the day was going to go. Nobody would have guessed today's action in advance. And no need to, really. A good trader just is going to react to the action in real time. This is especially true in these markets. No need to do it. A good trader just needs to keep reacting in there. We've been pushing this over and over, and we ultimately are at the same price as we were in May 2022 now. We've been in this range bound for about 9 months, and this is not a bull. This is not a bear market. It is just consolidating Groundhog's Days markets. I mean, it does not get any more. I mean, if this doesn't prove the point, what we've been talking about, this is exactly it. I mean, big picture, we are back at square one after a full round trip today. And once again, it's, clearly no coincidence where we closed out the day right at this core downtrend level. Once again, triangle resistance shown here in that big yellow, it's where it was, right? It's the same thing that we keep going back to over and over. It's about the 40-25-ish is where we were. The considerable probability lean here and now therefore remains, though, unchained from prior days. As long as we continue to hold this 39.95, we ultimately break out to the first back test again, the 40.45, which is now the key to the 40.56.75 recent swing high, en route for the ever significant 40.75.80 area. However, though, it is quite obvious since Monday that we are building a very choppy, trappy sideways base with 4K to 40.31 gravity point, in particular being a formidable congestion zone. This could easily fill out more, but same drill, and bulls will need to hold that 39.95 4K to keep this in play, or we sell. As usual, put the crystal balls away, stay the course, focused on trading the charts, reactions, and your setups, following price, level to level, whatever avenue it so chooses. This just goes back to exactly what I was explaining, a little bit earlier, but you can see how we came in there. So it was like around 11 today. Right where our little golfer man is here. Markets triggered a great failed breakdown setup there, which it's best to view it on this 15-minute chart just to kind of see, so we can see this though. But you can see the original low at 39.70 around 10 a.m. Then at that 10:30 candle, we washed out below here pretty hard, hit that low, that 39.63. Then as we bid into that 10:45-ish candle, we recovered the low, and then that was with force. So for failed breakdowns, this type of strong wicking is what it is best to see. It's you know, a sharp, decisive loss of a level, then a rapid wick formation. We alerted this and took this trade the same as always, gave it a little cushion for the pushing above that low as it was being recovered. Got our starter entry into the 39.85 bid, which was you know, it was very small size here, as we didn't want to give back, you know, much of anything in case it did continue to go south. Unfortunately, this worked out well, and we added as we passed through the A plus entry of that 39.95 recapture that we were going through, you know, on stream in real time, taking profits into the 40.11 resistance, leaving some runners on there that 2 of 3 were closed at the end of day spike that we walked through in real time on stream at our target number 3 of 40.45, which basically wrapped up our trading day as we gave the play-by-play for the after hours Tesla earnings. Trend moves are rare, as we pointed out to Sparty in the after hours room about 7:30 tonight, if you go back and look. And as our clean moves that, you know, that move through multiple levels like today, this is why we teach and prefer ourselves to only try to trade maybe 1 to 3 fresh trades max a day. If we can catch a level to level move, or even better, a move that runs cleanly through more than 2 levels, this is quite rare and indicates that we would be at that time in very good trading conditions. Just have to remember though that no matter what, you do not push your luck after. It is best to unwind, decompress, reset your bias, and start all over fresh once again. Rinse and repeat. Every time we say that phrase, that's what it means, right? It's just time to start that over. All right, let's get a little bit of look at what we're looking at here for tomorrow. I'm going to go ahead and back out to the 4 hour here. Let's go ahead and let's get rid of Golfer Man. Don't want to get rid of him, but I was pretty stoked though. I was just like messing around, and then I saw there was a little training video, and I was like, what is this? And he's like, it was all about emojis, and their description is just hilarious because they're trying to be kind of like serious or something, being professional about it. But yeah, so looking at tomorrow, it is this simple, guys. If we sell back to the 4K area, we may try along there, but it's very well tested, and a safer bet would be to wait for it to fail, then recover. Or obviously we could wait for a reaction there, perhaps something like hit it and then spike to 40.11, then get long with that 40.20 being the next level target once again. Pretty much the same drill for the 40.20 support level. If 39.95 fails, we are not interested in longs again until the 39.65.70 area, which would put us back down into to this trend, this price path, this trend line down here below, right? But yeah, I mean that the 39.20 would be another area of interest if we you know, if we would look down there to try. The 40.70.80 zone remains in our favor as a possible reaction short, but as we have said previously, if we are squeezing into the area with momentum, any shorts should be very small size, as counter trend trades. They are always going to be victims of high loss rate outcomes. Again, cost of business and just the reality of the current market we are in. The bull case tomorrow, unchanged from yesterday, since price is also somewhat unchanged. As long as we are above the 39.95 4K, there is a setup for the upward breakout to 40.45.50, then the 40.70.80 zone. Market will need a catalyst likely for this, which, as we have said every day for over a week now, we have the FOMC next week on 2/1 that can easily count as one significant possibility. And we consider the entire area from 39.95 4K to the 40.31 gravity point as being a tactical chop zone. And we must continue to trade carefully in here, guys. In terms of decent areas to add on strength, if we can build out a significant base sub the 40.31 gravity point resistance, we may look to try a small breakout long at the 40.35 to 40.40 momentum liftoff area. But of course, level to level after, as always. Taking a look at the bear case for tomorrow, essentially the exact same thing as we did yesterday. begins below the 39.95 4K. And again, we just continue to stress that we absolutely do not chase trades, meaning in order to short below here, we would need to see a bounce first to retest and then reset a little bit and drain all that demand, or basically what we'd call a period of acceptance, right? Then and only then would we consider shorting from the low 39.90s. That 40.20 once again short is also a possibility, say around the 40.16, 40.10. Once again, if we could kind of get in there, just kind of a similar setup with that, like a bear flag type of setup. And if so, then would likely be best to look to take profits as we traded down into the key 4K or even slightly above there to avoid the liquidity burst that we've been seeing on the tape and in Bookmap over the last week or so, as everything seems to be contracting market wide. And we keep pointing those out in real time as we see them on the tape and on Bookmap. I talk about them a lot intraday, probably at least 5 or 6 times today. Yesterday, it was about like 15, I think we counted, and quite a few in there. But as a quick summary for tomorrow, we'll go through this real quick. Massive volatility today that again went precisely just about nowhere. We do consider the 40-45 4K range as being a big, choppy, trap-filled base. As long as in the zone, take profits quick. Do not chase. Probability is still signaling that if it fills out yet more with above 40-45-ish to for sure the 40-56-75 swing high resistance, triggering the breakout up the levels to 40-70-80. But if 39.95 fails, we will sell yet again. Those are the easiest way to put this. This is exactly, I had put a summary as I explained it to Sparty around 7:30 in the chat earlier. This is the long-winded version of it, but it really is that simple. It doesn't matter. We don't need to predict. All we need to know is where are the triggers. To the upside, it's obvious. To the downside, it's obvious. In between, it's all chop and noise, but you know how to play that, because if there's a failed breakdown, well, then we pull that back up. If there's a failed breakout, well, we play it back down. There is no room for guessing. The thing that's getting everybody into trouble is staying greedy and wanting more or chasing the plays. That's it. Every single one of those I could walk through and they could show me and I will prove it. And if I am wrong on any of those, I will gladly pay you for whatever your loss is. I will put my money where my mouth is. But on that note, guys, I am proud of everything that's going on in here. You guys are starting to really kick some ass, and you just got to get the confidence in yourself. And if anything, have confidence in these plans. You can go back every single day and look at what we talked about, pull up these videos, pull up the charts, and then look at it as it went, and you'll see there is a reason why this works for us and why we're doing what we're doing. You've just got to have the same confidence in yourself. But if you don't have it yet, have confidence in us. Have a good night, guys. I'll see you in the morning for pre-market prep. Take it easy and cheers, boys. Have a great night, guys.